Hey guys, welcome to another portfolio update, weekly portfolio update. I'm going to start off with the crypto here because the crypto is actually doing well. Stocks portfolio, not so much. So you can see my balance is now at 7,000 New Zealand dollars, and that's still from that initial investment of $1,500. So up over 300%. And yeah, you can see some of the changes in here. Doge specifically up to 69 cents at the moment. Bitcoin 58,000. Ethereum 3.5. That's actually holding pretty damn strong at that, pretty close to highs. Yeah, we're at like all-time highs basically at the moment or close to, for a few of these coins, so probably a good time to do some trimming and get ready to reinvest into a dip. Potential dip. So this is how the stocks are doing at the moment. Yeah, we're down $2,800 since last week. Yeah, one of the worst weeks I've had. Still in March there was a week where I was down 4,000 in a week, so it's not quite as bad as that. But yeah, all the retail name stocks are getting beaten down very badly. Yeah, last day of the week, Friday market day, I was supposedly up $318, but with the exchange rate changing, I was actually down. So that's lovely. But yeah, you can see the stocks that I've got here. You can see my buy prices. You can see the past day change. So the only moves that I've made this week is I put $1,000 more into my account, and with it I spread it across Coinbase, Fiverr, Palantir, and SPCE. So obviously not a lot went into each because it's only $1,000, but yeah, chucked a bit more in there. You know what, I've actually done some better math here. I'm not actually down 2,800, I'm down 3,800 for this week. Even better. But yeah, that's just the way the market is at the moment. This here total gain number is still wrong, because I put 37,000 now, and so I'm up, what's that, $7,900. But considering I was up 20.5k, it's a lot down from there. But yeah, long term, it's not really an issue. Short term, it doesn't feel the greatest, but yeah, we just got to hang in there. Eventually, this cycle will change. You know, the hedge funds are currently shorting the market, taking out a lot of leverage to protect their long positions, and at some point it's going to make sense for them to close out those short positions because valuations are low, at which point there will be buying pressure and stocks will be able to move up again. But yeah, in the short term they have to protect their leverage. Well, this is all a theory, sorry, it's not fully confirmed. It's just there have been large banks in America coming out saying that in this market hedge funds are extreme sellers, and that they have taken on significant margin. And I mean, there's not a lot you can draw from that. Like, if they're selling and they're taking out margin, they're obviously shorting. But yeah, this is not financial advice. I don't really know that is fact. It's just a deduction that seems likely. But yeah, so they're probably shorting the retail stocks because they felt that they were overvalued and they had to protect their margin, because obviously if their stocks fall and they get a margin call, that's really bad. But if they short their long positions and the market falls, they essentially don't lose anything, and then they cover their short positions when the market is lower and they've lost money on their long positions, but they've made money on their short positions, and essentially cancels it out. And they carry on investing as usual. I believe this is a common market cycle. Happens every now and again. Hedge funds just need to play it a bit safer when they've got margin. I mean, hedge funds having margin just really scares me. Don't like the thought of it. But yeah, I guess they do what they're going to do. Yeah, pretty much all my current positions, they're like mostly negative now, which is pretty horrible to see. Most of my older positions that I had sold at some point, the ones that kind of made me be up in the first place, yeah, most of them I've sold. So just looking through my portfolio, it looks pretty bad because I cycled some of my profits from other stocks into new stocks, and apparently those stocks went down. But hey, it's just a short-term thing. Should be fine. You can see most of my stocks are down. Still slightly up on CCIV. I'm glad I got such a low cost price, but I'm not glad that I did not sell when it was at $60. But yeah, there's some pretty good valuations out there at the moment on a lot of these retail stocks and high growth stocks and recent SPACs. All the stocks that are getting beaten down, a lot of them are like 40 to 60% off of all-time highs. And I mean, it's a great time to start in the market if you're not already in the market. It's best to get in at a time that it's low if you're like first starting out, because it's really discouraging if you like get into the market in like say February this year and then everything's just going down and all you've known is the market going down. You're probably not going to stay in the market. But if the market's already down when you get in, and then maybe only goes down a little bit more before it starts heading back up, and you actually learn probably a lot more from, in the early days at least, from the market going up, because you don't give up immediately. So yeah, good time to get into the market right now if you've never been in before. You can use the referral links in the description below if you like, or use a friend's referral link or anything. Get a free $5 or $10 depending on which you use, Sharesies or Hatch, or even Interactive Brokers. But they don't have a referral reward, I don't think. Or no, they do, but it's like yeah, you have to like deposit like $10,000, something crazy. Not likely to happen. Yeah, so those are all my positions. You can have a look through if you like, pause the video or whatever. And the other thing I just wanted to go through was how the Nasdaq is actually like performing pretty well. Yeah, it's like a little bit off of all-time highs here, down 2.7%. If you're holding a lot of the stocks that I am, or a lot of stocks that have gone down a lot, and you're looking at this like worried, like why is the Nasdaq fine when all my stocks are just falling out of the sky? Don't worry about it. Like, a lot of people are in this boat. Pretty much all retail investors, especially high growth and tech investors, are in the same boat. It happens. You need to just keep your conviction. Like, if you had solid conviction in these stocks before they dipped, then they've got greater potential now because they're at a lower price. Like, you should either be buying more, or if you're like really afraid or you don't have any more money, just hold and just wait it out. Can't keep going down forever, especially if you're down on stocks, like down on your portfolio overall. Like, if you get out now, you'll probably just never get in the market again. It's a common psychological effect where if you lose, you don't want to play again, kind of thing. Don't get out of the market. You'll be right. As you can see, the market goes up over time, over 5 years, over decades. The market goes up eventually. You just have to hold, so long as you've chosen good stocks. And if you aren't so confident in your stock picking abilities, you can go with buying index funds or managed funds like the ARK funds, or you can just buy like a broader range of stocks. if you're not as good at picking stocks, like buy 20 or 30 instead of 5 to 10, you know. Like me, I'm not fully confident in my stock picking abilities to only have like 5 positions. That'd be too much for me, too scary, and I'd be too emotionally invested in it. But yeah, I've got, I don't know how many that is, maybe 25 or so. And yeah, it's a manageable risk for me. And yeah, like my portfolio heading down, it's like 13 or so $1,000 down from all-time highs, or 12,500 down from all-time highs. And like I'm not too bothered by that. It does, obviously I don't like it, but it's not anything that's going to stress me out or anything. I'm not too concerned by it, which is kind of where you want your portfolio to be, right? Just at a volatility that suits your mentality and mindset. If you're super adverse to risk, or you just like hate the thought of your stocks going down, then you should probably be a value investor. And the opposite, if you can't stick there, like you won't be able to keep going if you're only getting tiny returns, then you should probably go through growth stocks, or just even trading if you got super educated into it. But yeah, personally, this is where my risk sits, and I'm pretty happy with it. I'd like to put in more money at the moment, to be honest, but don't have the money unless I refinance my house, which is a risky one, refinancing to put money in. Not super risky, but probably more risk than I would like to assume. If I were to refinance my house, I'd probably only look at putting another 5 or 10,000 in the market, and then keep the rest as cash reserves, like, because there's still, you know, the chance that on top of this market cycle, there's also a crash or a correction, which would be pretty devastating for some of these high multiple recent SPAC stocks, or recently IPO'd stocks. Like, yeah, my portfolio would be down a hell of a lot more if there was a correction or a crash, whereas value investors might not see it as much, might not be as bad. But yeah, leave a like and subscribe if you'd like to do that. Thanks for watching the video. Have a great day. See ya.